Over the last 6 years, we've been fortunate enough to purchase over $250 million worth of property in the Brisbane market. Now, this has helped us understand the Brisbane market at a very, very deep level. It is the third largest capital city in Australia, and there is a fair few things that you need to know about the different parts of the Brisbane market so that you can capitalize on your next investment property. So in today's video, myself and Ben are going to break down exactly what you need to know when buying your next investment property in the Brisbane market. So in today's video, Simon and I thought it would be a great opportunity to bring 10 of the different reasons we like the Brisbane market and important things to know. So what's number one for you, bro? First things first is the fact that Brisbane is not one market, obviously. It is the third largest capital city in Australia. There's over 2.7 million people that live in the greater Brisbane region. There's over 430 different suburbs throughout the greater Brisbane region. And there's actual 5 major local government areas as well. Now, each of these different locations, each of these different pockets within Brisbane, and all of those 5 local government areas represent value for one reason or another. And it's about really analysing these different markets within Brisbane, aligning it with your budget, with your strategy, with your goals to figure out where you should be allocating your funds. But, number one thing is just recognising that Brisbane isn't one market. And I think that goes into part 2 that you wanted to talk about as well in terms of the returns and the diversity of the returns throughout Brisbane.
Yeah, what I love about Brisbane, the same as Sydney and Melbourne, is really that diversity. Like there's that really high quality blue chip inner city opportunity. There's the, middle ring suburbs around that. There's beautiful beaches on the north, east and the south as well. Then you've got the more affordable northern, southern and western markets as well, the same as you do in Sydney and Melbourne. So there really is something for most people there. Whether your budget starts at that $450 range or goes to that $2 million range, there's a lot of diversity. But if we think about Brisbane as less of one market and a series of different markets, some of those inner city and blue chip beachside locations have literally doubled in the last 5 to 10 years. And that's more in alignment with the longer term performance of Brisbane, which has averaged around about the 9.7% per year when you look at the last 40 years from Homely, divided by that amount of time. Now, what I love about Brisbane is when we go through those 430 suburbs across about 30 indicators, we find that there are some suburbs still in the southern, the northern and the western sides of the city that have averaged somewhere between 2 and 4% per year over the last 10 years. So as a value investor like myself who wants a part of the market, but is looking for a place that hasn't gone through that crazy price growth, there's plenty on offer still in Brizzy.
And I love the fact that there is all of those different options in Brisbane, whether you want to go for that more expensive blue chip suburb or whether you can only afford to get into, a $450,000, $500,000 property. There's still options out there for you, which is great to see. It'll be interesting to see how everything unfolds as Brisbane continues moving through its growth cycle. But the third thing that we want to talk about is just the huge amount of value in Brisbane at the moment and the upside potential in the market, because we've looked back at previous growth cycles in Brisbane. And when we were down at the Phil Anderson event last week, it was really fascinating to see that Brisbane's average performance over the last 3 real estate cycles was about 129%. So looking at where the market is at right now and what it has averaged over the last 10 years, there's still a lot of value out there, but you really need to be able to pick the eyes out of the market, don't you? Some of the key performance indicators that we look at to analyze how well the suburb has performed in recent times, we always like to look at the 10-year performance. We like to look at the 3-year performance. We like to look at the 1-year performance as well to gauge an understanding as to how that particular suburb has performed. We're also then comparing that to the current DSR score that we're seeing in those suburbs, and having a look at all of those different indicators gives you a pretty decent indication as to where that particular suburb is sitting at any given time and what the potential upside could look like as well.
I love that, bro. Like, to make that super simple for people, all we're looking at is if Brisbane's averaged 9.7% a year for the last 50 odd years, and then it's done 8% a year for the last 20 years, if we can find a suburb in Brisbane that's only done 2 or 3% per year for the last 10, then relatively speaking, it's underperformed, and there is maybe more upside there than a suburb that's done 10% a year for the last 10 years. So the fourth thing we like about Brisbane is the rental vacancy rates. If you look at SQM data, they're now sitting below 1% citywide, which is crazy because 3 or 4 years ago, they were sitting at 2.5 to 3% with all that inner city unit stock that's now been completely wiped and washed out. On top of that, if you look at CoreLogic, they're predicting rents to rise in Brisbane and Australia by about $100 a week this year, which is incredible. If you look at Simon Priestley from Propertyology, he's expecting rents to rise by $200 a week this year in Brizzy. From talking to the two managers we work with that collectively look after about 1,600 properties in Southeast Queensland, all of the rents are going up by $50 to $100 a week at the moment as well. So super exciting upside there for yields too.
And I like the fact that there's that diversity with those rental yields as well. You know, you can look into a more affordable area and get a better rental yield. You know, generally speaking, when you want to go for that more expensive blue chip property, you do sacrifice a little bit of rental yield there as well. So you can find that balance. Now, the fifth thing is the fact that we're getting the 2032 Olympic Games. We've talked about it a lot on this channel now, but I think it's just such a great thing for the city to host. And, you know, looking at other markets around the world and seeing how the Olympics has affected those property markets. You know, I guess the most comparable one was looking down to Sydney, right, in the 2000 Olympics. Looking at the property prices around that period of time, according to Homely, from 1997 through to 2003, Sydney market went up 97% off the back of the Olympics there, which is massive. Now, we know how much infrastructure the Brisbane or Southeast Queensland government is going to be putting in for the Olympics. We know how many jobs that's going to create. I believe it's over 140,000 jobs for the Brisbane region, which is going to be absolutely massive. And I think that intangible thing of just bringing eyeballs to the market, you know, more tourists, obviously Gold Coast, Sunshine Coast, Brisbane, big tourist destination. But then once we get the Olympics, getting a lot of different people from a lot of different places around the world, I think that'll give people another part of Australia, because when people overseas think about Australia, you know, we're not even a blip in the radar, and all they really know is Sydney and Melbourne. So it'd be great to see Brisbane come onto people's radar and see how that could potentially impact the market long term.
You know, I'm excited about the athletes and the coaches and the businesses that are going to come to the likes of your Noosas and your Gold Coast that are going to go, well, this is actually training mecca. Like, we got 300 days of sunshine on a good year, not an El Nino year. And, you know, that means people can train more, the temperature's beautiful, and I think it's going to already blow up the inflated prices longer term. The other thing I like about it is, you know, historically speaking, we should be in for another GFC at some point in the next 10 years, but I think all of those jobs, all of that infrastructure that you mentioned is going to create a bit of a softer landing. I actually saw something in the Financial Review in the last couple of weeks suggesting that they reckon there's about 50 years worth of infrastructure projects that the Australian government has decided to bring forward into the next 10, just in Southeast Queensland alone. Rail, roads, cross-city tunnels, all sorts of interesting and exciting stuff. And you just have to look at some of the areas we're buying. I just don't know any of them aren't getting $500 million there, $2 billion between this and that. Like, there's so much going on. New
roads opening up and all of that. And I think that's a good thing to talk to, that infrastructure. That was the sixth thing that we had written down here. You know, there is unprecedented amounts of infrastructure spending in Queensland, in particular Southeast Queensland right now. And, you know, we drove down the Goldie the other week together, and it's just crazy to see the amount of roadworks that are occurring, the amount of cranes around the city and things like that. You can really start to see this infrastructure popping off already.
I think some of the seventh and eighth things are to continue on with that population growth as well as the jobs perspective. So according to the Australian Bureau of Stats, Brisbane, as you said, or the greater regions at about 2.7. You've got the Sunny Coast and the Gold Coast as the two fastest growing regional towns in Australia right now, which is crazy. They reckon that Brisbane, within about 25 years from today, will be the size of Sydney or Melbourne at over 5 million people. But what I love about Brizzy is the incomes are already higher per household than Melbourne, and within about 6% of Sydney right now. So, you know, it's one of those places where I know there's beachside suburbs in the city where you can buy for 25 to 30 cents in the dollar. I know there's absolutely blue chip property within 12 k's of the city that you can still secure for under $1 million now. Where in Sydney, Melbourne, that would be sort of the $2 to $3 million mark now. So it's very affordable, and that's why so many high income earners are moving up, so that they can have that lifestyle, but they can still afford to live and get back to that Australian vibe and that Australian dream.
Yeah, without a doubt. And then, the ninth thing on top of that is just looking at those long-term averages that you mentioned before from that Homely article, 46 years, 9.7% on average. Now, of the major metro markets around Australia, 3 of them have been the top performers longer term, being Melbourne, Sydney and Brisbane. Now, talking about those things, it's like the fundamental drivers for property is population growth, infrastructure growth and job growth. And, that's why those 3 markets have been the front runners. But then coupling that into where we're at right now in the current real estate cycle, and that's a 10th thing that we want to talk about. We've talked about in previous videos that I would highly recommend going to listen to about the 18.6-year real estate cycle and the fact that we're now coming into the second half of that real estate cycle, where typically in Australia we see your secondary cities like Brisbane, Perth, Adelaide and some of the other regional areas around Australia perform extremely well. So you've got this convergence of all of these different key performance indicators coming together, which make it look extremely positive up here in Brisbane. That's why we're putting our money up here and we're helping a lot of clients safely execute their plans up here at the moment as well.
What I love about history, bro, and what I particularly love about Australia is we've got such good data between Homely, the ABS, CoreLogic. And so when we talk about cycles, generally we get, according to Phil and Fred Harrison, about a 14 years worth of up with a 4 years of down or flatness. Now, that can be very bumpy. It's not this beautiful like linear thing. For those of you that have bought in Sydney since the GFC, you've seen it go like this very regularly. I think Sydney's going through its 3rd small decline or recorrection now that I've seen in the last 6 years, although the average over the 6 years is still very positive. I think in the last stage of the last real estate cycle, or the second half of that one, between 2002 and 2008, property prices in Brisbane went up around about 120 odd, maybe a bit more percent than that, which was crazy. What was also interesting is interest rates during that time rose 22%. Now, if we go back to the cycle before that, I think it was between 1984 and 1990, interest rates rose over 20 times during that period as well. And prices in Brisbane went up by 100%, as they did in Perth and Adelaide. So what I love about the history is we can sort of never predict the future, and the future is always going to look bumpy, but we can remember what's happened in the past and then we can make better decisions. Now, the decision that Simon and I are making as investors at the moment is we have been buying Brisbane, we have been buying the Sunshine Coast as 2 of the markets that have underperformed relative to your Sydneys, your Melbournes, your Canberras, your Hobarts in the last 10 years. And at the moment, the results have been incredible. At the moment, they're still heading in the right direction. I think this year and early next year to mid next year could be a bit bumpy, fair bit of emotion around, a few things going on that could keep a lot of people on the sidelines. And for us, that's an exciting opportunity knowing where things are going over the next 4 to 5 years. Yeah,
it's actually good to see things slow down a little bit, because 2021 was a wild year watching property prices do what they did there. So now represents a really, really good buying opportunity because that demand has dropped a little bit. And what we're finding with our clients at the moment is we have a little bit more ability to negotiate. We're getting more properties to consider as well, which makes that journey a hell of a lot more fun and enjoyable as well, which is really, really exciting. So I'm quite bullish about the Brisbane market over the next 10 to 15 years. Obviously, long-term is the way that we look, because we can't control short-term movements and you can't ever guarantee short-term movements. But looking at, markets like Sydney, like Melbourne, like Brisbane over the longer term, regardless of what external situations have been coming up, they still have been moving in a positive direction over that longer term. So that's why it's great to develop that type of strategy where you're not trying to, double your money in sort of 2 to 3 years, but you're sort of looking for the longer term to generate some really positive long-term capital growth, to generate some good cash flow, and eventually hopefully own that property completely outright so you can actually live off the rental income as a passive income for life.
Love that, bro. So for those of you that are seriously thinking about investing over the next 6 to 12 months and like the idea of Southeast Queensland in Brisbane, we'd love to offer you a one-on-one strategy session. Just jump over to the website, www.pumpedonproperty.com, click in a free strategy session where Simon, myself, or one of the team can talk about where you are today, where you'd like to be in the longer term. We can educate you on the market, you know, the blue chip stuff, the beaches stuff, the more affordable south, north and western stuff. And then you can take that with a grain of salt and go and either smash it on your own or become one of the small number of clients that we take on each week. And we can educate you further and further, and you can leverage off our experience of buying over $250 million worth of property in Brisbane and get an incredible result. But either way, we wish you all the best and all the safety moving forward in the market. And we really, really like Brisbane at this stage.
Woo! That's a wrap.
That's a wrap.
That's cool, bro. Yeah. Oh, sweaty. So sweaty. Oh, that's good. Look at that.
So nice, eh?
Oh.